Hello, everyone. Good morning, good afternoon, depending on where you're joining us from. Thank you so much for being here with us today. Welcome. We are really glad to have you all. My name is Maria Jimena Jurado. I'm a policy associate at the Center for Cleaner Policy, where I work on climate finance and carbon markets. Today, I'll be your host and for this third and final live talk of our series. Um, I'm just gonna give people maybe one more minute to get settled, to join the meeting, and then we'll get started. In the meantime, I'll just tell you all a few housekeeping notes. This session is being recorded. The recording and any materials will be shared with you, with the participants. Afterwards, it will be sent to the email that you all used to sign up to register for this event. The session is fully in English. So hopefully you're all comfortable with that. We do ask you for the first part of our webinar to keep your microphones muted during the presentation, especially during the panel discussion, to avoid background noise. If you have any questions or any comments, please use the chat. We will be monitoring it constantly throughout the event. We do want you all to participate, turn on your cameras and your mics once we reach a breakout room session here in our live talk. But in the meanwhile, we ask you all to keep them off. You can keep the cameras on. We like to see everyone's faces, but the microphones, please turn them off. Furthermore, if you experience any technical issues, please reach out through the chat and we'll do our best to assist you. If you want, please start introducing yourselves in the chat. We'd love to hear where you're coming from, when you're joining us from. And yeah, that's it for the housekeepings. I will go ahead and walk you through what we have planned for the next 90 minutes. We will open with some brief remarks from three colleagues who have been central to this initiative. Stephanie Tulipano from Environment and Climate Change Canada, Alison Bender-Corbett, our Executive Director here at CCAP, and Gerardo Canales, who is the Director of Implementasur, our implementing partners of the Recycle Organics program. Then we'll go ahead with Diana Rodriguez, who is our Senior Waste Policy Associate. She will present the research process and the interim findings from the policy report that we've been developing, drawing on 4 months of desk research, surveys, and expert interviews. This will be followed by a high-level panel discussion moderated by Adriana Bazan with 4 global experts reflecting on the findings and their implications for policy and finance in the waste sector. We will then move into what I was saying, the facilitated breakout groups, where you, who are our practitioners or stakeholders, will directly engage with the emerging approaches and provide targeted feedback to what we have found and created so far with our policy report. In this part, your experience and your pushback are exactly what we need at this stage. So we really, really hope you engage, you stay active in these breakouts. As I said, turn on your mics, converse about the topics at hand. And lastly, we will close very shortly with some takeaways from the panel discussion, from the breakout rooms, and we'll tell you about the next steps. With that, I'll introduce our next speakers, who will just say some brief welcome and opening remarks. It is my pleasure to introduce first Stephanie Tulipano, who is a program officer for climate and nature at Environment and Climate Change Canada, the institution whose generous support has made this entire research initiative possible. I will also like to invite Alison Bender-Corbett, who is the Executive Director of the Center for Cleaner Policy, who oversees the full breadth of CCAP's work at the intersection of climate policy, methane mitigation, and carbon markets. And finally, we will hear from Gerardo Canales, who is the founder and director of Implementasur, who has more than 2 decades of experience in climate, solid waste, and circular economy across Latin America and the Caribbean. With that, Stephanie, the floor is yours.
Absolutely. Thank you. Well, good morning, good afternoon, and good evening to everyone joining from different time zones. I'm pleased to join you on behalf of Environment and Climate Change Canada and to support this live talk series under the Recycle Organics program. I want to thank CCAP and the Implementaser team for creating a space that has been honest, practical, and grounded in real experience. Over the past 2 sessions, this process has helped sharpen our understanding of why methane mitigation in the organic waste sector remains so difficult to scale. And the message has been clear, which is the challenge isn't simply a lack of capital, but it's also the structural conditions around projects, project preparation, incentive alignment, risk perception, and the strength of the institutional and market systems working together to support investment. We've also heard very clearly how these issues intensify in small island developing states. Today's discussion is exactly where the conversation needs to go. As we delve into the emerging insights and the key directions informing the final recommendations, I encourage us to focus on what is most actionable and on how closer alignment between policy, financing approaches, and partnerships can help move projects from concept to scale. I'm very much looking forward to this discussion. And with that, I'll hand it back over to you, CCAP and Miriam. Thank you.
Thank you so much, Stephanie. I'll just give the floor to Alison next.
Thank you, Jimena. Thank you, Stephanie. And thank you all for joining us for today's discussion. I'm so pleased to see that we have a wide range of representatives with us today from government, finance, philanthropy, civil society, and the waste sector more broadly. And we're grateful to Environment and Climate Change Canada for its support and to our partners, Implementaser, and those across the Recycle Organics Network for their collaboration. I know we have a lot to get through today, and I've been asked to keep my remarks short, so I will do my best. But I do want to say for the past 4 years, through this project, we've had the opportunity to pair direct technical assistance with a country-driven approach. That combination has been central to the work. We have not only approached this as a one-size-fits-all exercise, but rather as a process of listening to country priorities, understanding local barriers, and supporting practical solutions that can be adapted to different national and municipal contexts. Today's call is an opportunity to share the findings from this work and to reflect together on what it takes to move forward from diagnosis to action. Many of the barriers facing small-scale organic waste projects are not entirely new. Many of these issues have been raised in different forms for years. What is important, however, is that these barriers often look different depending on where you sit. A municipality, for example, may experience the challenges of a lack of technical capacity or implementation funding, while a financier may see a lack of bankable projects, reliable data, or clear risk allocation. A national government may see gaps in policy frameworks, pricing signals, or institutional coordination, while a donor or development partner may see the need for better project preparation, aggregation, or blended finance structures. At CCAP, we see our role not only as researchers and technical experts, but also as conveners. These are complex issues that sit at the intersection of policy, finance, even municipal operations, markets, and community behavior. No single institution or perspective can solve them alone. That's why today's conversation is designed to bring together different stakeholders, perspectives, and voices to test the findings, strengthen the recommendations, and identify practical win-win solutions that can work not only for governments and communities, but financiers, and most importantly, the climate. We look forward to the discussion, your feedback, and the ideas that emerge from the panel and the breakout sessions. Our hope is that today's exchange will help move this work from diagnosis to action and contribute to stronger policy approaches for financing organic waste methane mitigation at scale. Thank you. And I'll hand the floor over to Gerardo.
Thank you, Alison. Thank you, Stephanie, also. Well, first I would like to thank everyone that has been involved in the program, of course, in these last 4 years, thanks to the Canadian government for their support. And it's, I think it's, my words mainly are going to be focused on I mean, be very optimistic about the future. I think we have created a great network. There is much more awareness about the issue that we are facing. And I think I would like to highlight the importance of collaboration. In the Global South, we share a lot of the barriers, a lot of the issues that are stopping us from moving faster. But we have created, and not only recycle organics, but with the support of CCAC, for instance, from different donors along, I don't know, the last decade, I think we have created a very strong collaboration network where different people come together and contribute with their own knowledge. We know that we need to adjust policy frameworks, we need to create capacities, and we need to accelerate as much as we can projects on the ground. Scale up, multiply the good examples that we are already seeing. So sharing experiences, knowledge, success cases, formulas are also an important part of the work that we want to promote. And that's why this type of spaces are super relevant to expand our work. So yeah, an invitation to contribute from wherever you are seated, to stay connected with this network and keep pushing this important agenda. Thank you.
Thank you so much, Gerardo. Thank you, Stephanie. Thank you, Alison, for your words. I will now like to move on with what is really what we're calling the heart of this session, a presentation of the research findings that have emerged over the past 4 months during this initiative. I would like to introduce Diana Rodriguez. She is a senior waste policy associate here at CCAP. She has been one of the voices of this research, but she's also been leading the coordination of the Recycle Organics program in 6 small island developing states. So she has all the ground expertise. She has the knowledge of what this research has tried to find out, to solve, and we would love to share some of those preliminary findings with you. Diana, over to you.
Thank you, Maria Jimena, and welcome everyone. As Maria Jimena said, I'm going to try to bring you into the work that we've developed in the last months, and on the findings that research and the data analysis has brought us to. And I wanted to start with the why we wanted to do this, and it's, as we've mentioned before, and our speakers before me have highlighted, there's a persistent challenge that limits flow of financial resources to the waste sector, and specifically to composting technologies and initiatives. And here are some numbers in this slide. I've shown this before in the first live talk, but just to have a quick overview, as many of you know, methane, which is very linked to the organic waste and the waste sector, is 80 times more potent than CO2 on a 20-year period as a climate forcer. And it's responsible for around 45% of current net global warming. And methane from the waste sector is 20% of the methane that's generated anthropogenically currently. But even as the sector has a great mitigation potential, there is a huge financial gap. So the data here in the middle, you can see an estimation by CPI in 2023 that, oh, the source is wrong in the bottom, apologies for that, it's 2023. The estimated needed resources by 2030 per year to mitigate methane emissions is $48 billion per year. 13.7 billion are flowing currently to methane mitigation, and 4.3 of that is being invested in the waste sector. And as you can see here, only 1% of that is going actually to organic waste solution, which is really shocking, because organic waste is actually the one that is, when it's anaerobically decomposed and managed in a way that it decomposes that way, that is producing those methane emissions on the waste sector. So our research wants to find out or to try to link why this gap is happening and how we can start addressing it effectively. So if we go to the next slide, I'll talk a little bit about the methodology of our research. We adopted a hypothesis-driven diagnosis we have started with a literature review where we looked into previous research on the topic. We also structured surveys for trying to have a more like a deeper understanding of different stakeholders that can give us more information on what this gap looks like in the reality, in their experience, and if our hypotheses reflect that reality and those challenges on the ground. We wanted to capture those perceptions and how they differ from different types of actors that are present in the waste sector environment. No? So we had a 1-month data collection period with questions that were related to the role of under specific models of our hypothesis. So we had practitioners in roles of government officials, of financiers, project developers, and NGOs and more practitioners that are on the ground as well, supporting the implementation. So each of the respondents answered an average of 30 to 41 questions, depending on the role. And sometimes you could also choose to have a dual role. So you would have an average of questions that you were answering that was a little bit higher. No? We received a total of 60 survey responses, and that's what we based the analysis on. We also had semi-structured interviews, bilateral interviews with experts, and interviews that were selected based on their exposure to the stages of the financing cycle. So from having experience in project preparation, risk assessment, pricing and regulatory design, capital structuring, and then we tried also to have a diversity across institutional mandate, sector role, and also geographic context. So we had a total of 10 bilateral interviews where we extracted more context detail across those financial cycle stages. A fourth part of the methodology was we developed or held a high-level policy roundtable in Washington, D.C. During mid-March, where we had a moderated conversation with practitioners, again, representing private equity and commercial finance and development finance institutions, multilateral development banks, philanthropic foundations, NGOs working at that intersection of waste and finance, as well as policy advisors, senior level advisors that were present at that conversation. And even though these are US-based representatives, we tried that the pool of participants would be working in active portfolios in Latin America, in Sub-Saharan Africa, South and Southeast Asia, and Pacific small and developing states. So we try to bring that geographic context throughout the Global South as well to these conversations. And then all of this fed the policy report that we're currently finalizing and that you are also going to be able to influence in the next part of the session. So we can go now to the hypotheses that we tested very quickly. For hypothesis, the first one, talking about how climate finance for methane does exist, maybe, but composting projects are failing to reach a financial close because of a weak project preparation and structuring, so lack of capacity of who structures these projects. That would be the first hypothesis. The second one looks into a high perceived risks versus the underlying real risks of composting projects. So we're looking at maybe lack of benchmarks or lack of standardized financing models or contracts that might inflate risk perception from financiers, and then which in consequence also inflates financing costs for these types of projects. A third hypothesis deals more with distorted incentives within the waste sector, so underpriced landfilling, weak waste fees or inexistent fees that make composting structurally less competitive when compared to other technologies of waste management, even when it is technically viable, that even could be simpler than sanitary landfills or even final disposal practices. And the fourth hypothesis talks about maybe looking into instruments that are available, such as blended finance or aggregation mechanisms, but maybe the sector and composting in particular as a technology, it's difficult for it to access them because projects are too small, are fragmented, maybe poorly structured as well, to be able to be absorbed into these mechanisms at scale. And that's why we don't see that flow of resources. So after looking at the hypothesis, I wanted to go into the findings. The first one, a primary barrier is definitely the limited municipal capacity level to develop investment-ready projects. So you can see here that most survey respondents identified a municipal institutional capacity and insufficient project preparation as the most influential factors preventing access to finance. We also shared during conversations and also from the surveys, banks and development financial institutions frequently reported that there's a lack of bankable pipeline. So from that perspective, also the pipeline is not seen, or the demand for this is not seen. So the investment-ready projects are not there for some reason. We also saw from our conversations and from the surveys that formal support mechanisms do exist, but are not translating into effective preparation capacity. 3 out of 4 public sector respondents reported that national level or state level institutions do provide dedicated support. So the problem is a disconnect between the available support mechanisms and the needs at the municipal level that are not being covered or connected with that offer. Then a second finding is the elevated risk perception amongst financiers, and that comes from 2 main things. First, there's no comparable reference projects, and that makes it very difficult to assess the expected returns of a project. No? And then composting systems are also very heterogeneous, and it's they are very dependent on local environmental conditions, on feedstock quality, on enforcement and regulations at the local level, and that limits the standardization across contexts. So these 2 things lead to informational gaps that are introducing a systemic overestimation of risks from the financiers themselves. So there's conservative investor assumptions that are persisting because there's no concrete data to challenge them, not because they are real even, or some of it might, but it's not. There's assumptions that are very conservative, and that is challenging the access to finance. Now, as you see here in the figure, the respondents for the survey highlighted that there's highly significant how the lack of these benchmarks and reference projects increases perceived risk. So this is something that they are agreeing upon, highly significant for 8%, and then followed by 33.3% that think is moderately significant. So this is a huge, it has a huge impact not having that data, which inflates those risks. We can go to the next finding, which is more talking about distorted pricing. As I mentioned before, there's regulatory frameworks are distorted pricing in terms of disposal being artificially inexpensive, the absence of gate fees, incomplete cost recoveries of waste services on the ground, and a failure to internalize environmental externalities within those pricing mechanisms. And then also a second factor is that municipalities many times lack authority or capacity or both to implement those pricing mechanisms, to enforce mandates within regulations, and apply penalties for non-compliance. So all of this is affecting the access to finance, and pricing distortions are also operating not only for operators and service providers that receive or should receive some kind of revenue to invest in these projects, but also on the side of the generators. No? So waste generators also don't see incentives to separate organic waste at source. So there's definitely, and you can see that there's a misaligned price signals that undermine that revenue predictability, the project economics, and that prevents projects, composting projects in particular, from meeting that financial viability or those requirements needed to secure that financing. And you can see also that how that was highlighted within the information that we got from the surveys. And finally, in terms of blended finance, they definitely remain underutilized, but they cannot solve or substitute for the preparation quality or to correct distorted incentives that I've mentioned in the past few slides. So there's definitely the knowledge level across actors in terms of aggregation mechanisms and blended finance is very limited in the sector. But there is a significant share of developers that considers that those mechanisms could be useful. So they are perceived as difficult to structure, as you can see here in the figure, but as having a potentially significant impact in implementing projects and accessing finance. So these tools are seen as theoretically beneficial, but operationally out of reach. And then just to summarize as well, just these different findings don't work in isolation. No, they are all interconnected. Yeah, they just, there's a clear architecture that is influencing the next step and oversizing risks. So weak project preparation reduces that investment readiness, then the distorted pricing undermines that revenue logic to build those business models for each project. Then limited standardization inflates that perceived risk, and that lack of data increases that risk that's perceived. And the fragmentation of responsibilities and lack of coordination with the regulation and with the policy framework in general, those failures prevent the appropriate financial structuring. So these generate weak, inconsistent pipelines rather than the flow of mature investable projects. So here we go into more the proposed interventions based on those findings. We have 7 proposed interventions, and I'll go through them very quickly. So the first one is to establish and enforce national organic waste policy frameworks and regulations. There needs to be clear regulatory architecture that defines roles and responsibilities that do not overlap within national and municipal level authorities. Then very concrete goals and targets and mandates that support them to have that implementation happen, which would send then signals of increased certainty to the private sector and to financial institutions that the sector is moving towards, increased certainty of revenues and of sustainability, financial sustainability. Then enforcement should be a critical pillar within those regulations so that these things really happen and are enforced and mandates happen as they are set up. A second intervention that we propose is the project preparation facilities that can support governments and also provide technical assistance to the municipal level. So that would bridge that gap between the project concept and the bankability of the projects. And these PPFs could reduce the risk for investors by analyzing and ensuring that there's a technical, legal, and operational viability to the projects. And they should be designed in a way that keeps in mind local government needs. If not, this gap is not going to be closed. Then this would enable structuring projects directly and attracting investment to identify projects. So not only building that pipeline, but once it's built, connecting it and understanding very well what the financiers are looking for in terms of information and requirements so that those are set up the way that they would be received effectively at that level. Then a third intervention would be a dedicating funding windows for small-scale projects, which would enable that portfolio aggregation for the decentralized projects that are very typical in the waste sector and at smaller local contexts. That would enable increasing the ticket size of the projects, which is sometimes one of the main barriers as well for composting projects to access finance, and then diversify the risk to better match the requirements of multilateral development banks, for instance, but also try to encourage engagement of local financial institutions, so microfinance institutions or credit unions that better understand those local contexts that could then together build or enhance that scalability and generate lessons learned of how this is implemented in for smaller projects. And that we think would help unlock additional funding from larger funding windows, such as climate funds, like having that case demonstrated on how to do it in a smaller scale. Fourth intervention is development of and implementation of MRV systems, of course, establishing robust systems that account for waste flows, for treatment outcomes and emission reductions in digital data platforms that have standardized methodologies not only for reporting, but for institutional processes that ensure data quality and comparability of that data. That would provide transparent and quantifiable and credible data for investors, for governments, and for carbon markets that require that type of information. So information needs to be also designed in a way that it's going to be useful to translate to what is needed for the financiers. No? So developing those MRV systems with that in mind. Our fifth intervention would be the implementation of integrated waste pricing systems and reform of landfill fees. As I said before, the design should and enforcement should be done in a way that user fees and landfill charges are being developed to internalize environmental externalities, to encourage the use of waste as a resource, and then at the same time, in parallel, discourage final disposal. This needs to be set in a system-wide manner where it interacts with all waste streams, not all the organic waste, because all of these signals that are sent are interdependent with all waste streams. So all of this needs to be established and designed in coordination with all other waste streams. And this should also allow for cost recovery, for allow investment to be returned to the sector, and earmark those revenues to be reinvested. That would allow technological diversification. Even within composting, you can make it more efficient if you are able to enable that technological diversification for waste projects. The final two are look into the first one into behavioral change, so the part of the generation of waste and enforcement of waste separation at source. The idea would be to align behavioral change strategies with individual stakeholders' interests, benefits, and needs, so that those messages resonate with each stakeholder. No, you can't have a full strategy for all types of generators, but have behavioral change strategies for each type of generator and each type of actor, even municipalities, to understand that this is important to enforce, to have a source separation, to have a feedstock that has a quality that then also supports the whole system to access that finance and to have a good quality compost at the end of the process. And connected to this one as well, the seventh intervention is more on the development of compost markets through different strategies that exist. So we're targeting now the downstream demand by developing compost quality standards, public procurement policies to use that product of compost in maintenance of public spaces, parks, so that there's a demand for that compost, but also supporting linkages between producers and end users of compost, particularly in the agricultural sector. Promoting or building in the promotion of, for example, organic agriculture programs that will enhance that demand of compost is also critical to build those markets holistically and not just with one specific intervention. No? So I hope this was clear. I have little time to get all of this very clear to you, but I hope this is useful for the conversations, for our panel discussion, and I'll hand the floor back over to Maria Jimena. Thank you, everyone.
Thank you, Diana. That was a remarkably clear account of what 4 months of research across the literature, the surveys, and expert interviews have produced. And I think it gives exactly the foundations we need for the conversation ahead. We will now move to our panel discussion, which will run for around 25 minutes and be moderated by my colleague, Adriana Bazan, who is the Climate Finance Program Manager here at CCAP. Adriana, the floor is yours.
Thank you, Jimena, and thank you so much, everyone, for joining us. I have seen that we have people from all over the world, Central Asia, South America, Africa as well. So we're very pleased to have you in here. And what we want to do in this segment is really build on what just Diana presented. What we want to do in this panel discussion is to move from diagnosis to action. What comes next, and how do we actually unlock financing at the scale for organic waste? Across the research, we came across that the financing gap in organic organic waste reflects a systemic challenge rather than a single bottleneck. And we see governance and capacity gaps limiting the pipeline of investment-ready projects, distorted policy incentives weakening underlying business model, and information gaps contributing to conservative risk assessment by financiers. And critically, all these constraints interact with one another. And that is exactly what we want to explore in this discussion. How do we move from the diagnosis to coordinated systemic level solutions that we can actually unlock finance at the scale and the speed required? And for that, I'm very pleased to be joined by 4 outstanding experts and partners. Let me briefly introduce our panelists. We have Anja Sveitia, who's a senior expert at the German Environment Agency with over 30 years of experience in waste management and circular economy. She focuses on the link between climate, waste mitigation, and methane reduction. And Anja co-leads the Climate and Cleaner Coalition Waste Hub and serves as a vice chair at ISWA, which is the International Solid Waste Association, specifically the Climate Change and Waste Group. She has contributed to multiple international initiatives on organic waste and circular economy. Welcome, Anja. We also have Kostas Verganelakis, who's an industry specialist at the World Bank Group with 25 years of experience in waste, energy, and infrastructure across Europe and the Middle East. He's a former COO and CEO in major waste and energy firms. He has led large-scale projects in waste management and energy recovery. He brings a strong technical and leadership expertise on sustainable infrastructure and circularity. Welcome, Kostas. And also we have Ebon Ayandele, who's a manager at the Rocky Mountain Institute, RMI, working on methane mitigation from municipal solid waste. She leads strategy development and techno-economic analysis and capacity building for cities. Her background spans oil and gas decarbonization, rural electrification in Africa, and energy transitions in mining. She combines technical, policy, and financial expertise to advance low carbon and waste sector solutions. Welcome, Ebon. And finally, but not least, we have Donovan Story, who's a waste and climate expert at the Climate and Cleaner Coalition and manager of the Technology and Economic Assessment Panel. He supports countries in advancing innovative solutions to reduce short-lived climate pollutants, and he's also a contributor to IPCC and the UNFCCC processes. Donovan brings global experience across Asia, Africa, and the Pacific with a background in international development and environmental policy. Thank you very much for being here to our panelists. And I'll start with you, Enya, because this really goes to the foundation of the systemic findings that Diana just presented. And as Diana mentioned, one of the strongest findings from our research is around distorted incentives, within waste management. And in many contexts, disposal remains significantly underpriced and pricing does not reflect environmental and operational cost. And even well-prepared projects struggles to demonstrate a financial viability. In response, we are drafting this set of interventions that Diana just presented, right? We're talking about establishing cost-reflecting pricing and stronger regulatory frameworks. We're also talking about complementing these with robust MRV systems and data infrastructures, as well as integrated waste pricing mechanisms. And at the same time, upstream interventions, such as enforcing source separation and promoting behavioral change. To enhance the feedstock quality and the operational performance. All of these in combination, and from your experience, what extent can these interventions, either individually or in combination, could address the structural constraints of this financing gap? And if I may push you one step further, what would you consider the quick wins that countries, specifically developing countries in the global south, could prioritize in the near term, and which actors need to be involved in making this work? Over to you, Anja.
Thank you, Adriana. Well, I think that the answer to that is a bit more complex, and many aspects you comprehensively touched upon in the study, in this research. And I'd like to actually even cast a little bit more broader picture, if you allow me. When you look into the project, into the composting project, financial viability, cost covering of OPEX, is a key issue for any financer who wants to come to a project. That's the first thing they look at. So now, where does the money come from in these looking into the Compass project? So you have a couple of revenue streams, and that is, of course, the polluter pays principle. So that means the fees. But we must be honest, the capacity of population to pay in many countries of the global south is limited. So you need other revenue streams, and you do need them in Germany as well. So we are also looking in the material and goods market. So we sell a high quality product from these facilities. And it's a sales issue and a pricing issue. Then we have the question of the carbon market, because we really avoid emission here with these types of projects. That is another source of finance for a waste project. What else do we need? We need to actually look into having additional support by governments on our product side, as well as on the pricing, as well as on the demand. And you already showed a nice idea about how you can actually improve the demand that in the study. And what we also need is reasonable access to finance. And in all of that, government plays a crucial role. And it's not always the Ministry of Environment, which has the key role here. So it's not always that the enforcement of a waste regulation is what really impedes or helps. We need level playing fields on the product side. And we need that especially because we have a biogenic carbon product versus a fossil carbon product market. And the fossil derived products, fertilizers, fuel, and so on, usually are heavily subsidized and supported in most of the countries. But their own revenue, their own stream of biogenic carbon, fertilizer, fuel, their own bioeconomy is not subject to support and not subject to overall policy in most countries. So that is not a level playing field. And if you're up against that, already your economics in the projects are frail. So it is super important to see that side of product market, not only on the demand side. I think you tackled that very well in your study, what you can do there for steering the demand from the government side, but doing it in a bioeconomic sense. And I think that's a vision a government needs to have. Second one is what you also addressed, the level playing field in between waste management. So there is a very cheap disposal on landfills very often, and they're often not landfills, they're mostly dump sites. And here we have the challenge, really. If we want to have a level playing field for separate collection and better treatment of the organic waste side in composting, usually already a lot of the transport cost to the landfill is saved by doing decentralized composting, shorter ways, less water transported. So there is saving, which is often not accounted for. Then dumping is too cheap. Yes. As long as it's cheap and there are no fees collected from the population, it's hard to compete, for sure. But it is not so trivial for most of the countries, nor the municipalities, to raise the price of waste at a dump site. How? I mean, dump sites usually uncontrolled. So if you raise the price at the landfill where you have the control and the gate, the control at the gate, then you even kind of punish the better sanitation measure versus a dump. So I think it is very important to think about how we can charge overall for the waste generated or the waste collected, and not only as a signal of burdening people, So every waste that is not recycled should actually be charged at a higher price than waste recycled. And if you can create a revolving fund from the money you collect, then you can disperse and support from government side recycling activities like composting, which are a bit more expensive, especially in aiding the first startup and the capital cost. So that is possible, but it's not trivial. It is even difficult in Germany, and it's also a high risk endeavor, collecting the money, getting the right data, operating a fund. Yeah, landfill taxes, I think, work where you don't have dump sites. Where you have dump sites, you need really to raise the waste fee rather than the landfill tax. Yeah, because it's difficult to collect at dump sites. You don't know what's coming in. So then another thing the government needs to provide for composting projects is access to carbon market. Article 6, but also local carbon market, very important here. And the last thing I would like to say, because I'm running out of time, is really this access to capital market and the risk management. And the two things you showed us in your presentation, you started off with, okay, they all only pay for incineration, and now we need to find out how we can better support financially from banks and others composting projects. Size matters here. And apart from what you suggested in terms of small scale programs, which usually come at a tremendous overhead and therefore are no investor is very happy about them, it would be, how can countries bundle projects together in a large portfolio of the same nature? Or, and that is probably something for Costas as well, how can we actually change our vision in the finance world? Is it really adequate any longer? Yeah, to finance sanitation projects like, for example, incineration and landfill in huge portfolios, because these are the big projects, and not demand that these projects really have a methane mitigation component. Yeah, you can finance a landfill plus the entire infrastructure for the composting and separate collection. Yeah, and then that moment you have development context together with the climate impact. And I think we need to change our vision very much. And the same accounts for incineration. Incineration doesn't want to burn water. Yeah, and that's what organics consist of. Yeah, so looking into integrated finance and making composting a compulsory part of one larger investment component for the sake of environment, climate, and health, and our pocket, would be something I would really like to see. Additional to what you have in your assessment here, bundling of small scale projects and bringing them on the market. So in all of that, government has a role, and I hope I showed some ways forward which we could address. Thank you, Adriana, and I hope I stayed on my 7 minutes. I couldn't see my phone here.
No, you are perfect, Anya. Thank you so much for bringing this holistic picture and touching upon different solutions and interventions as well. This is very interesting about the intersection with bioeconomy, right? Fertilizers nowadays with the energy crisis that we are facing. This is super interesting, and the incentives and the subsidies that we are seeing with those fertilizers vis-a-vis the bioorganic fertilizers that we can create. Also, you touch upon carbon credits, which is not something that we put on our research, but definitely we would love to know from the panelists what their opinion is about. And then I take up your last comment about the funding mechanisms for small scale projects, and I will switch to, by your suggestion, to Costas to talk about one of the most thought-provoking insights. Costas, this is very interesting because we have seen perhaps a wrong unit of analysis, right? Composting projects are a small ticket size. That's what we know. And rather than trying to finance composting projects individually at the municipal level, which are often too small, fragmented, too local, the more promising pathway may be to focus on how organic waste solutions fit within larger capital flows. And as Anya mentioned, we have very expensive overhead costs for that, or transaction costs. And to date, significant financing is already moving through vertical climate funds such as GEF, GCF, Adaptation Fund, or even climate resilient programs, agriculture and soil health initiatives. But composting initiatives remain yet underfinanced because we have absence of eligibility criteria and co-benefit frameworks that govern these flows. So we are exploring interventions such as creating a dedicated window for smaller scale waste projects, but also questioning whether those risk reinforcing fragmentation rather than solving it. So from your perspective, is the priority really to create a new targeted instrument for small projects, or should we be focusing more on embedding organic waste into existing large infrastructure financing frameworks and making eligible within those structures? Over to you, Costas.
Thank you, Adriana. Congratulations on this excellent initiative, and it is my pleasure to participate in the panel discussion. Echoing Diana Rodriguez for many of the points of her presentation, I will try to articulate my perspective on this topic, and I will try also to answer to Anya because she mentioned this on her points earlier. So my perspective is as follows. I strongly agree with the premise that the constraint is not just a lack of good composting or anaerobic digestion ideas, but that we are often working with the wrong unit of analysis and the wrong entry point for capital. What the data tell us is quite stark. According to Water Waste 3.0, which is World Bank's flagship waste report drawing on data from more than 210 countries and economies and more than 260 cities, organic waste remains the single largest fraction of municipal solid waste globally, 38% worldwide, and over 50% in low and lower middle income countries. But yet, only about 6% of waste is composted or treated through anaerobic digestion and other ways globally, and less than 1% in low-income countries. At the same time, the waste sector is already one of the largest sources of methane emissions globally, responsible for roughly 20% of anthropogenic methane, with food and organic waste as the dominant driver. Why targeted small-scale instruments are not the answer? From my perspective, dedicated funding instruments for small and standalone composting projects or anaerobic digestion or even biodrying are neither viable nor particularly attractive for DFIs, for development institutions like IFC, World Bank Group, or other funds. First, fragmentation is structural. It's not accidental. Municipal level composting projects are often small, bespoke, and highly context-specific. They struggle with feedstock risk, with weak tariffs, uncertain offtake for compost, this is very important, and high transaction costs relative to ticket size. Solid waste management already absorbs around 6% of municipal budgets on average, and yet even basic service gaps persist, especially in low and middle income countries. Adding more ring-fenced project instruments risk reinforcing this fragmentation rather than correcting it. Second, from our perspective, from IFC's perspective, bespoke instruments for dozens of hundreds of small projects fails on three fronts. One, it is the insufficient scale. Two is the limited replicability. And three, there is high processing and supervision costs per dollar invested. In practice, that makes them difficult to justify institutionally, even if their development rationale is sound. Embedding organic waste into large vertical climate or adaptation funds, as you mentioned, Adriana, or expanding eligibility criteria makes sense conceptually, but the data explain why it has not worked in practice. Large climate finance vehicles typically back programmatic nationally anchored interventions where mitigation outcomes are measurable, standardized, and scalable. Organic waste projects, by contrast, are often treated as municipal service upgrades, not as revenue-generating climate infrastructure, despite their methane benefits. As a result, composting, anaerobic digestion, biodrying remain co-benefits at best, not core investment categories. And although in more than 150 countries, they include the waste in their nationally determined contributions, most commitments remain conditional on international support and implementation in routinely constrained by regulatory and revenue uncertainty, not by lack of technology. So while eligibility reform is worth pursuing, it is unlikely on its own to unlock capital at the scale required. So from my perspective, the priority should not be neither in new boutique instruments nor abstract eligibility reform, but rather, and this is the new angle that I'm bringing in the table, systematically preparing the conditions for private sector investment in organic waste value chains. Private participation already dominates treatment and disposal globally, whether predictable revenue exists. The missing piece for organics is not the demand, it is bankability. Concretely, that means focusing on policy and regulatory enablers that reduce risk and shorten payback periods, such as, and I will give some examples of this, fast-track permitting and predictable licensing for composting, anaerobic digestion, and biodrying plants, because this is what the private sector wants. 2, guaranteed and simplified grid connection for biogas to power projects, because in some of these organic waste projects, you can produce biogas where you can utilize. Clean environmental attributes where applicable for renewable natural gas, this RNG as we call it in North America, including recognition in gas grids and carbon accounting frameworks. Cost-reflective and reliable tariffs for electricity or biomethane offtake. And last but not least, which I think that it is very important, legal mandates or premiums for compost use. For example, in agriculture, this is what Diana Rodriguez mentioned before. Also for land restoration or public procurement to stabilize the demand. These are precisely the conditions under which private developers can aggregate projects, they can standardize designs, and they can scale platforms. If those enabling conditions are in place, organic waste suddenly becomes financeable at scale, but through private balance sheets, not public grants, and this is the difference. And that opens 3 open points that IFC mandates and the operating model, and we can assist a lot on that. First, we can assist in financing at project level for bankable, anaerobic digestion, composting, RNG, biodrying facilities. Second, in platform level financing that bundles, as Anya mentioned before, multiple facilities under a single sponsor or a holding company. And third, we can finance on the company level for developers, operators, and aggregators that scale projects across cities, across the whole countries, or even for commercial organic waste projects, not just the municipal ones. This is exactly how scale is reached in other infrastructure segments, not just in this sector that we're discussing. And it is consistent with finding in Water Waste 3.0 that mobilizing private capital is indispensable, given that more than 500 billion US dollars investment gap in low and lower middle income countries alone between 2022, 4 years ago, and 2050, which is basically tomorrow. Thank you very much.
Thank you, Kostas. This is very interesting what you're mentioning, right? I mean, highlighting how to make organics financeable once the right policy and regulatory conditions are in place. And I would like to take on that last key takeaway that you said, right, about putting the right conditions and switching to Eben. I would like to know, Eben, your perspective. From your perspective, from RMI perspective, how do we better bridge the gap between the supply and the demand for investable projects, right? What is still missing today to unlock real private investment appetite, building on what Kostas just mentioned? And where are you already seeing willingness from financial institutions to deploy capital at scale?
Thanks, Adriana, and it's very nice to be here. I think a lot of the points that have been made earlier actually tie very nicely into this question. And so I would say maybe over the last year or thereabout, one question that we have been sort of trying to answer is how to kind of scale private capital deployment for sort of organic waste projects, but also landfill gas to energy, right? So primarily like diversion as well as gas capture and just methane mitigation more broadly. And so with that in mind, right, like I think just kind of want to caveat this by saying that our focus was primarily in emerging markets, especially in Southeast Asia, Latin America, and I think we did a small study in Nigeria because we weren't able to do a broader sort of sub-Saharan African study. But I think some of the findings I would say were very interesting and very complementary to a lot of the items and conversations that we've been having. One thing that, you know, I do want to maybe just like point out is that we did speak to, right, like commercial banks, private equity, venture capital. We also spoke to, you know, some DFIs. And I think one thing that I thought was interesting is that while, right, like we're all here and we're all saying that finance is needed in the sector and, you know, there is sort of this call or demand, if you will, for financing, I think what we also heard was that a lot of the projects are not necessarily, right, investment ready or bankable, if you will, right? And I think this is definitely like something that we've heard a lot on this conversation. And so, right, like while there is sort of that need for capital from the supply side or sort of like from the private FI perspective, many of these projects are not really sort of meeting the investment criteria that, you know, private FIs would be looking for. And so I think this is where, right, the project preparation facilities or PPFs are very valuable and helpful and needed, right? Because PPFs can help create a pipeline for a pipeline of bankable projects, right? That would one sort of like help meet some of those investment requirements, right, before private finance is kind of willing to deploy financing at scale, right? Whether that's, you know, a criteria around investment size, return on investment, the risk level. And I think also there are a number of reasons why we find that some of these projects are not bankable, whether it's, you know, feedstock quality. I think I heard the speaker right before me talk about that, whether it's just kind of like poor cost recovery models, right? There are a number of reasons, whether it's right, like there's no offtake guarantee, but I think that's the value of project preparation facilities, right? They are able to provide, those facilities are then able to provide technical assistance to sort of municipal governments, whether it's, you know, from project identification phase through pre-feasibility, feasibility, right? And kind of like helping to connect even more so through the financing stage. So I would say that's kind of one of the main findings around like the need for preparing bankable projects or a pipeline of bankable projects. I think with that said, I think it's also important to kind of understand that I think for private capital to be deployed at scale, right, there would still be sort of like a role, like I think a smaller role, right, but still a role for concessional capital, right, as well as grants, because right, like when projects are very much in the earlier stage, right, like the private capital and private investment are usually less willing to absorb some of those very earlier stage risks, right? And I think that's where concessional capital grants, right, can help absorb some of those. And also, I think what we found is that it's also just like a lot easier for private FIs to come in when, right, like the capital stack is a little bit more diverse, right? So I think that's the other piece of finding that we have found. And then I think the one more thing I will maybe kind of lump together is something around just the robustness of carbon markets, right? And I think this kind of ties in a little bit into the MRV systems, right? Like if you think about if you think about like what we're finding and what we're seeing with the carbon markets is that when it comes to kind of doing the accounting and trying to sort of reconcile how you quantify or how you value like the benefits for waste methane projects, we see that, right, like the sector is sort of fragmented across whether it's methodologies or monitoring technologies. Like some of these things can be complex, can be lengthy, right? And so you might find multiple different sort of methodologies for landfill gas to energy or AD or composting, right? And I think there is a need for sort of a more unified carbon accounting system, right, that aligns developers, aligns off-takers, investors, and how to really quantify the environmental benefits of these projects, right? And also, right, like I think from the investor side, right, like that's an additional revenue stream that could improve the viability and sort of the cost recovery of those projects. And so I think I would say that a unified carbon accounting system and kind of a way to also continuously monetize those environmental attributes to improve the revenue opportunity and kind of just review improve the viability of those projects. I would say are kind of like the three big kind of buckets of takeaways for what I think are the enabling conditions to then get private finance to be deployed at scale. I think there was a second angle to your question, Adriana, around sort of where are we seeing some willingness from private FIs at this point, right? And maybe the way I would answer that is less around sort of like specific points or specific geographies, even though I think we have been able to identify some of those geographies. But I would say generally FIs are willing to, right, like invest if to an extent, there is some demonstration of a number of different factors, right? So investment readiness, as an example, right? And there are certain questions that, at least in our research, we ask to try to gauge that investment readiness, right? Like, I'm not going to be exhaustive on this call with some of those questions, right? But I think when you think about how do you assess investment readiness, whether it's the ease of doing business, like the sovereign, credit rating, or even how easy or difficult it is to get permitting, right, for some of these projects, organic waste management projects, right? Like that is an indicator and one of the things that we looked at. And we kind of asked very similar questions around a number of different buckets. So investment readiness, enabling policy and regulations, right? What sort of policies exist, right? Is there an organics sort of separation, like it's organic separation, diversion mandated by law, for example? What kind of waste management infrastructure exists, right? Are there sort of like methane mitigation technologies that are currently being deployed? If so, at what scale? How is waste being like how much of waste is even being generated? Because that also is an indicator for impact for kind of when you deploy the technology. And so there are, right, a number of buckets and some of those questions that we kind of asked along the way. And of course, I would say a really big one is cost revenue. Cost recovery, right? Which I think a number of people have said. And I would say the icing on the cake would be sort of like the benefits piece, right? And so what are some of the co-benefits, social, environmental? And so I think all of those questions are kind of like a way for us to do a qualitative assessment, if you will, right, of where would be the highest impact / maybe lowest risk geographies that private finance can actually go right now and deploy capital. And I think we found about 6 of those geographies, at least within our focus areas, right? And so I'll mention those very quickly. Santiago, Chile, Brazil, Brazil, Monterrey, Mexico, I think Bangkok in Thailand, Penang, Malaysia, and Manila in the Philippines, right? And Sao Paulo, Brazil. Yeah. So within sort of like those, the area of focus for us, those were kind of like the 6 markets that we found, because they've demonstrated some level of methane action and a lot more advanced than a number of different geographies.
Thank you, Evan. Very interesting. And we saw that there are a lot of participants from those regions as well. And very interesting what you mentioned about the technical assistance and the PPF. And as I'm listening to all of you, right, we are seeing that it's not only a technical or a financial challenge or a policy or a market failure. It's also a coordination problem, because we see that many different stakeholders and many different actors take different roles and can support in different stages in order to bridge that gap of financing gap. But yet we still see that the sector remains highly fragmented, with relatively small group of actors working at the intersection of waste and finance, working on behavioral, working on pricing, working on carbon credits, on enhancing the private sector, and often in parallel, in a not very coordinated way. And what we have seen is that we need more strategic, sustained efforts, potentially focused on specific regions, as you mentioned, Evan, and supported by upstream interventions that I also saw around there on the chat, such as technical assistance and project preparation facilities, PPF, which can help transform early stage concepts into bankable, scalable pipelines, particularly at the subnational and national levels. So building on that, and from Climate and Cleaner Coalition's convening role, Donovan, what will it take to move from those fragmented efforts toward a more coordinated, systemic level approach supported by TA, technical assistance, and PPFs that can actually mobilize finance at scale? Over to you, Donovan.
Thanks, Adriana, and thanks to all of the speakers so far, and also the summary of the report, which I found really enjoyable to read, actually. It was really refreshing to see such a deep dive into composting from a range of different perspectives, which made it, I think, quite unique and quite a valuable contribution in the way that it explained particularly what the possibilities were. I think it's really important as a conclusion that there was no single shared reason for failure or for success. And obviously we don't want to get too lost in context, but I think that often the institutional knowledge of why things succeed and why things fail in terms of composting and working with organic waste is often lost. And platforms such as the report and such as the survey you've done, I think will help us better understand where we have been more successful than elsewhere. And I think Constance, for example, started to frame from an external investor's perspective, 4 or 5 key principles, which I think we can keep in mind. And Anya and Evan also raised some really core points, I think, which could be considered alongside the report as well, in which we see as, if you like, sort of the basic principles or the basic necessities to be put into place for composting and working with organic waste to be more successful than it has been. I think that there was a really important discussion in the report around rethinking key problems. And if I could sort of move a little bit differently to the other speakers, which have covered all of this ground very well, I thought there was a very good discussion on risk and risk perception over working with organic waste and in the composting sector. I think there was a good discussion introducing us to also technologies, and technologies are constantly emerging and changing in the sector as well. And I think there was also a very good discussion on providing the right evidence to the right stakeholders in their language. And quite often we speak in a singular language to different stakeholders as if it has an equal benefit or equal sense of understanding. And I think that has been a mistake to date. I think that we need to learn that in the solutions that we provide, that we are able to speak different languages to different constituencies and different stakeholders to get them on board in terms of not only composting, but other forms of waste management as well. So I think the use of singular language and a single voice and a single expectation that all stakeholders will come on board equally and evenly has been a bit of a failure to date. And we need to be smarter in terms of our language and in terms of our targeting and in terms of understanding who we're speaking to and what is motivating them to engage, to invest, and to undertake risk. And I think that discussion on risk was really useful. And I think also there was a really important conclusion, set of words that were drawn, that risk is often overstated. And I think that is greatly true. It depends, though, upon the stakeholder that you're talking with, the nature of investment, the scale of investment, over their appetite for risk in this sector. But then we have to think about what sort of scale is actually necessary to bring about change. And we have obviously a range of NGOs online as well, many of us know, who work at very much a local or an urban or a regional level. Their degree of risk and their understanding of risk is different from the IFC in terms of investing in waste. So again, we need to think about what are we trying to achieve and what sort of scale is most relevant and what degree of investment and capital is required to bring about the changes that we want to see. So I think the risk is overstated is an important conclusion from that. And I think, though, that risk is often existing, that perception of risk is often persisting in the absence of clear evidence and data. And I think as an international community, it's really clear for us that we provide the evidence of the data of what works, what's involved, what are the, as the other speakers have pointed out, what are the key parameters, what are the key, what's the key framework for success, and we're able to communicate that more effectively and more clearly than we have been to date. Because I think that there is a need for evidence and data in this field which is more consistent, and which is more backed up by science, and which is more backed up by an understanding of economics and finance. So I think there needs to be a greater awareness, perhaps as the report suggests, through more effective platforms on sharing technologies, whether they be hard technologies or soft technologies. I think that we also need to understand that solutions sometimes fall outside of waste and outside of the waste sector. And I think the report also points out that we need to demonstrate the municipal finance advantages of doing waste differently. We need to understand the benefits in terms of jobs and livelihoods, but also understand that the benefits also do not fall evenly as well. And they're not necessarily co-benefits. I think for many communities, they're core benefits. And so we also need to adjust our language of what is a co-benefit and what is a core benefit in terms of working with waste. Because I think sometimes we make assumptions over what is a co-benefit and what is a core benefit, and this doesn't help progressing discussions, whether you're talking to ministries of finance or whether you're talking with NGOs and communities. I also finally think that we need to understand the impediments not just as finance or as policy or even as technology. We need to better understand that the behaviour of adoption of change, which includes a risk assessment, and the decisions and the drivers of decisions are equally as important to technology and finance. We need a better behavioural science around waste management and waste policy to understand the needs of stakeholders and the language of stakeholders and how benefits and risks fall across the sector. And I think we need to make sure that the risks don't fall simply on one or two actors, either implementers or financiers, but also the benefits are accrued more broadly from change as well. And certain technologies lend themselves to much more skewed benefits and risk, which I think we need to be aware of. But we need a better understanding of behavioural decision-making and behavioural understanding of risk and of technology adoption and of working in the sector. So I think in terms of the question that you posed right at the beginning in terms of what can be the role of international organisations, including these, I think it's creating better and more clearer platforms on solutions. We have the ability to work across stakeholders, municipal level, NGOs, national governments, international MDBs, and so on. And I think that can be a key role for those, for the people that have been invited to speak today, is to work across scales and work across stakeholders as well. It's to also develop better data and better information to drive decisions. We've heard a lot about carbon credits, and the 2027 IPCC report is actually creating methodologies around accounting for emissions from organic waste that are more comprehensive, but also understanding emissions from composting in relation to other forms of waste treatment, which I hope provides greater data in terms of NDCs and in terms of carbon credit initiatives as well. And finally, I do really think that we need to better understand and identify the behavioural and knowledge barriers, and to address those alongside finance and technology has been equally important for change. Thanks very much, Adriana.
Thank you so much, Donovan. Thank you so much for wrapping up super nicely in terms of like working across different stakeholders, across different actors, acknowledging that there's that unlocking finance for organic waste is not about a single solution. And that's what I'm listening across the 4 panelists. It's about aligning policies at various levels, creating incentives for the private sector, specifically private capital, and showcasing the specific roles for stakeholders. It's like, how can I get involved based on the organization I represent, based on the level of understanding I have in organic waste, and also understanding that from pricing and regulation to financing structures, private capital, and ultimately coordination, this is very much a collective effort. And I'm very thankful to the 4 of you for being here in this panel discussion, for your insights, and for this conversation. This has been truly rich, and thank you so much to the 4 of you. And Jimena, I'll give the floor to you for the rest of the events, which I believe we have very short time.
Thank you so much, Adriana, and a very, very warm thank you to our 4 panelists for such a grounded and direct conversation.